Welcome back. You're tuned into CNBC-TV18 and this is Corporate Radar. Well, a good time to focus on our special offering, Quarter Se Quarter Tak, where we bring you the earnings expectations from every sector. Vinny joins us today to tell us what she's expecting from the pharma sector. Vinny, take it away.
Hi, good morning. For the pharma sector this time, Q4 FY25, analysts are expecting pharma companies to see a sales growth of around 11 to 13% and a EBITDA growth of one could expect in the range of 18 to 19%. Profits are expected to grow somewhere around between 13 to 15% in Q4 FY25. What will be driving this? Operational efficiencies, the currency depreciation side, as well as a reduction in freight cost is something that could support the growth over here. However, in terms of profitability, if you remove Revlimid sales for most of the companies, then we could see a bit of a slowing coming in as the tailwinds could be lower from the API side. The raw material cost on that front could be a bit lower and could have peaked out now in Q4 FY25. And after that, we could see a reduction coming in. So FY26 onwards, maybe some reduction on that front. Now, given that import prices for key APIs as well as key starting materials have increased 8% over the past 3 quarters, these could be factors that could impact the growth going forward. The growth for pharma companies this quarter is expected to be supported by domestic as well as US market growth. Q4 typically, when you look at it, is a seasonally weak quarter coming in for acute heavy companies. So if they are not diversified enough and they're specifically focusing on acute treatments, then maybe some bit of an impact could come in on that. Some of these companies are Alchem Labs, Ipca, that could see a bit of an impact. Now, company-wise, when you look at it, Dr. Reddy, Zydus, Lupin are expected to outperform the revenue growth, and that could come in at 17 to 20% in this range for these 3 companies on a year-on-year basis. This I'm talking about is the overall business. So it includes US as well as the domestic business. Now, specifically, let's talk about domestic formulation and in terms of the revenue expected that. Over there, you're expecting to see domestic formulation businesses see a growth of 12 to 14% in Q4 FY25. Dr. Reddy's, JB Pharma, Torrent Pharma, Ipca and Sun Pharma will lead the growth in domestic formulation. Growth momentum could be somewhere around 11 to 13% for these companies in terms of organic growth during the quarter. This is mainly driven by ramp up that one is seeing in chronic therapies for these companies. Improving productivity is something that will expand the growth for the company. Now, looking closely and coming to the US side of the business for most of these companies, what are the factors that are impacting over there? Price erosion in the base businesses there. So that will be offsetting the steady traction that one is seeing in key products. So whether you look at the generic Spiriva, Myometric, obviously that's the case that has just come in terms of update for Zydus and Lupin. So a bit of a negative on that front. But specialty scale-ups for Sun Pharma are something like Revlimid supporting the growth for Dr. Reddy, Zydus, Aurobindo Pharma and Sun Pharma. So good numbers are expected on that front. US formulation revenue is expected to see a strong growth of 8% on a quarter-on-quarter basis. Revlimid sales, that's the key reason for this growth as well. Now, revenue ex Revlimid for the pharma coverage could actually see a growth of around 5%. Pricing is stable. Benefit of limited competition as of now for Spiriva as well as Myometric is something that has supported the growth in Q4. Going forward, that could come off as well. Company-wise, Zydus is expected to grow at 20% in the US market, supported by Revlimid as well as Myometric or Myometric that was supporting the growth in FY25. US market, 12% growth is going to be followed for Lupin and 7% growth is what one could expect for Aurobindo Pharma. EBITDA growth 18%, 130 basis point improvement in margins. On a year-on-year basis, raw material prices are stable. We're keeping an eye out on exclusivities. How is that going? As well as operating leverage are factors working out well for the company. Key to watch out for in terms of commentary going forward is what investors are watching out for, because what is going to be the outlook in terms of domestic market growth, US pricing, generic pricing, how is that going as well, margin trends going forward, capital allocation plans, and any updates on tariffs is something that we'll keep an eye out on. So yes, all in all, Q4 FY25, another strong quarter is what we're expecting for pharma companies. Robust sales, margins, gains driven by launches is the key factor to watch out for, and commentary is something that we'll keep an eye out on.
Okay. All right. Vinny, got it. Thank you very much for that. It's a very, very comprehensive look ahead to Q4. I'm just looking at the Nifty Pharma Index. Let's pull up the index as well. In the last 1 year, the Nifty Pharma Index is up about 15%. This year, obviously, with the headwinds, market cooling off and the impending US tariff issues, it's still down 8% for 2025. That's, of course, the index rate. Let's pull out a longer term chart. There we go. This year has been a year of some headwinds. So how should you play the space given the numerous uncertainties involved? Vishal Manchanda is with us. Vishal, good to have you on. So I'm going to start with a very, very basic question. No one knows what's happening with US generics and tariffs and what eventually happens. But if we just go by, leave that aside for a second, go by business growth, prospects of business improvement, then would you bat for some of the specialty US generics player or specialty US pharma players? Or would you bat for CDMO? Would you bat for domestic formulations as a segment? As a segment, what looks most strong or strongest just on the back of business?
Right. So I think as a segment, domestic obviously is stronger than US on a structural basis. So US currently, I think, is doing well for most companies. A large part of the earnings is being contributed by the US. But probably the next 2-3 years, we might see US pulling down earnings because of the drag that we'll see on account of the limited competition launches, contribution from limited launches coming off. So, but domestic will continue to be structural, 8 to 12%. And then, so from a valuation perspective, we'll have to pick and choose where we see the most value. So I think if you look at the large companies which are diversified, I would focus on companies with less of US contribution. So companies like Sun and Cipla have around 30% US contribution, while the others are between 40 to 50%. I would stay away. While tariffs, there is still uncertainty around tariff, and that would impact companies across the board. But obviously, those with larger presence stand to get more impacted. While in our view, tariffs broadly is unlikely in the space. Then again, as you said, if you look at the CDMO category, that's, I think, is extremely richly valued. Valuation is a reason I'll not chase that space. Maybe I'll choose and pick if there are smaller names, relatively less talked about names in the CDMO category, where we can probably look at opportunities.
So can you expand on that? You're saying you'll stay away from large US players like maybe Cipla and Sun Pharma. You like CDMO. Who do you like, or what do you like within CDMO?
So just to kind of correct that, US I'll stay away from Reddy, Lupin and Zydus. While if I want to buy something, I'll buy Sun and Cipla because they have relatively lower US presence. And again, if you look at Sun, they have a larger specialty patented business, less of generic business. So Sun is preferred, and Cipla has got a complex pipeline that's going to last for long, not a pipeline that's going to stay for a year or 6 months. So from that point of view, Cipla is preferred. So again, on the CDMO front, I think there are certain names like smaller names like Shilpa, Medicare, Jubilant, Pharmova, which are not considered as pure CDMOs, but they have about, so like Jubilant Pharmova has got about 30% of sales coming from CRAMS opportunities, CDMO opportunities. So that's a name I would like to kind of consider as a CDMO bet.
Let's map this with valuations as well, Vishal. I mean, you've given us a basic breakdown of growth, what to play, what to avoid. From a risk-reward perspective, valuations, which would be your top picks?
So again, in the larger names, Cipla and Sun is where I think there's a larger chance of these companies outpacing consensus and based on their ability to offset Revlimid erosion. So I think these two companies should be able to offset the Revlimid erosion through new launches. So that's one. And if I go to the small cap, so then I have preferred names in the small cap category, which is Pfizer, Shilpa Medicare, Jubilant Pharmova, and Orchid Pharma. So a number of names there. All of these are into various, so Pfizer is more of a domestic play, Orchid is an API play, betting on the import substitution opportunity. Jubilant Pharmova is a diversified play, but with a large presence in the US. So they probably are immune from any tariffs related risk, and they are also proxy to a CDMO, proximity to CDMO.
Got it. So Vishal, final question then on tariffs themselves. Your top picks from a US market perspective are Cipla and Sun, like you're saying. Now, how grave is the risk of tariffs? I mean, can these companies scale up more quickly from plants, if not in the US, maybe in Canada and Mexico? Do you think they'll be able to mitigate the impact? What are you penciling in with respect to a tariff scenario?
So I'm not assuming companies would shift their manufacturing base to the US. Probably they would want to pass on the tariffs to the consumers. And I think we are in a position to do that. And not only in a position, but they'll also be compelled to do that because they're already operating on wafer thin margins. And if they choose to absorb the tariffs, they probably would get into losses.
Okay, all right. Vishal, appreciate you joining in. Thanks a lot for giving us that perspective on the pharma stocks.